about 50 to 1 against that worked out. Early line on the intro for Market Vitals. MarketVitals.io, Market Vitals, the stream, HFR from the floor, actually on the floor, roofied, mistrade Matt Davio. My name's Bob. Pleasure to have you along here for Market Vitals, our daily stream, talking trading price discovery on assets that we found interesting for one reason or another, and many other things to keep it light, energetic, like a pit conversation from the days of yore at the Chicago Mercantile Exchange. Matthew, good morning.
Good morning, Bob. Good morning.
You do not know the backstory and how hard that was for him, but he passed with flying colors. Matt, this just in, breaking news. China brings back anal swab testing for COVID 2 weeks before the Winter Olympics. Can you imagine debarking from your plane? What are they going to have, like little cubicles? Hey, wait a second. I got a used one. This ain't mine.
Come over to the anal swab center for your anal swab. Your free anal swab. You'll be doing this. You'll be doing this daily.
Do you have to swab as deep as they did the first nose swabs? That swab's got to tickle your spine. Otherwise,
my question is, do they use the same one they use for the nose, or vice versa?
Oh, Matt, sad day today. Hold on a second. I can't say sad day with anal swabs there. I just can't. Rest in peace, though. Meatloaf. Matt, you're a giant music lover and incredibly knowledgeable around music. Tell me what you know about Meatloaf.
Bob, I would do anything for you, but I won't do that.
All right. We'll move right along, though. Not Louis C.K.
Louis Anderson
passed away, too.
Meatloaf, obviously, everybody knows the ballads and, the whole thing, but I don't know if you remember him in the Rocky Horror Picture Show. He had quite a impressive couple scenes in there where he just stole the show. So you might want to go back and revisit the Rocky Horror Picture Show movie.
All right, Matt, we got pretty good action today in the stock market, which we trade. And I wanted to just bring up something right away as I share here. And this is our sheet, the Market Vital daily sheet. And again, here today, what I wanted to point out here, the pivot here, 44.49, the pursuit risk 44.62, the upside, 14 points between there, almost 63. Little math here, divided by 0.17 gives you an 82-point range predictor. And so by my math, I think on the downside, 44.04 still within target to fill out the 82-point range predictor. Matt, what do you do? And I know you look at this. You do it in the NASDAQ. Tell me just a little bit about why you would want to know what an expected range is going to be for the day.
I mean, 80% of the, 90% of the days kind of end up in that expected range, right? So, like for example, today that number for the NASDAQ is 382, and we have from low to high gone 350. So we're basically in the range. And, how I use it is if I know, for example, that the low was 532, I'm kind of looking to, based on the profile also. And if I and today's a very balanced profile, for example, in the NASDAQ, if I were looking for opportunities, once that thing kind of flipped off that bottom this morning, you don't have to get long right at 540. I got long actually at 640 after it flipped, so it was up 100 points. And the reason I got long was it was just like, okay, we were already 300 wide. If that holds, we could run, if that 540 holds, we could run up to 900. And sure enough, we got up to, 858, close enough for government work again. So, 200 points, but only 40 shy from really what the upside target was. So again, that's a 200-point move, not even, buying the bottom, buying at 100 points off the bottom, and you got a 200-point runner still. And then I ended up flipping and getting short there. I wanted to be short 850 to 900. So I did that, and we're down another 200 points. It's crazy days. I've had three 150 to 250 point moves today in the NASDAQ. And, I've been short, long, short, and currently flat.
Right on.
And
yeah, when I was very, very young in the market, I mean, one of the first things that a seasoned trader told me is like, if you don't have an expectation on what that trade's going to do, what are you even doing? I mean,
right.
a manager doesn't put a guy in the clutch because he's a 140 hitter.
And
he's got expectations.
And I talk about this all the time. My job is, I'm not expecting to get 90, if a range is 382 points, I always say I'm only looking, like, for me to have an A day is taking 20% of the total range. And I don't know the total range until the end of the day.
Right.
But for example, today, that's only 75 points. Like, you could make a good living off of trading NASDAQ for 75 points a day. Believe me, days like today where you're seeing 600 points in 3 trades, you're just thanking the trading gods, because it is, it's not normal. The volatility is, askew. And we made yesterday was our largest range day of the year for the NASDAQ. So that starts playing into it a little bit too. You're like going, okay, how much are we going to stretch here? We're really been waterfalling hard, and there's going to be these hard turns. One of the first things I would look for, though, is still the NASDAQ needs to take out yesterday's high. We haven't done that all week. We've just been making new lows every day. And yesterday's high can't even be overcome the day before, the day after. So.
Well, Matt, there is a whole lot of chatter that I've been watching in the Twitter sphere about everybody that's just buying the dip, idiot. They're still like, and me and you both talked about this coming in, that this market setup from a technical standpoint is different. It's just different. It is.
Yeah.
And we're going to get to that. But before we do that, let's talk about the clown world that we live in as far as valuations are concerned. And this from the American Institute of Economic Research. We talk about trades like this all the time, and it's usually just one company is so ridiculously valued versus another. And the first one that I think we did was Zoom versus Standard Oil, right?
No, it was Zoom and Exxon.
Exxon. Right, Zoom, Exxon. But this from American Institute of Economic Research is even more unreal. And that is Apple at a $3 trillion market cap is worth more than AT&T, Boeing, Coca-Cola, Comcast, Disney, ExxonMobil, Ford, Goldman, IBM, McDonald's, Morgan Stanley, Netflix, Nike, and Walmart combined. I mean, talk about, let's look at the Apple chart, because when I look at something like this, and it seems like the valuation is unsustainable. Let's just say that, unsustainable. In a perfect world, you sell Apple and buy all of the rest. But let's just look at the Apple side of it.
Or maybe just sell them all, because they're all overvalued. I actually want to start with one of our favorites making new lows again here today, and that's the modern Enron of our time, Moderna. And this company is trading, got as low as $159.14 today. Interestingly, if you're just looking, this is a 1-year chart. We're back into balance, Bob. This is the most traded price value-wise for the last year. So, however, this is an ugly chart. I mean, think of all the people that got trapped and crammed, from June of last year. So now we're 7-8 months from the high. Well, not the high, but this is where we took off from, and the high was put in at 500. So 500 to 155, Bob, and it's now currently still a $65 billion market cap, Moderna. This is lost, over 2/3. It's close to 70% gone. So again, you had, a market cap that was somewhere 250 billion, and now back to, 65 billion, still coming back to earth. But there's more, to me, there's more downside. I think this thing will trade all the way to the bottom of that profile, down to 60 ultimately. And
so another half off coming. The good news, and I saw this today, is the good news is that half off is not as painful as the first half off.
Yeah, but you can see it here. We're just entered. This is a daily chart. We just entered the value zone, and this has a long way to go, Bob. I mean, I think it's going to trade all the way back to $67. So another $100 coming off of that over time. And I'm not saying it's going to happen next week, but bounce, sell, work your way down to $65. And even at that level, it's going to be worth, again, 25, 30 billion, which is still insane.
All right.
So anyways, let's take a look
Take
at
a bite of the apple.
Hold with me 1 second. Everything is moving pretty slow here. Apple obviously has been, it's the big daddy of all the market. It's the largest. I still think today, but I can't say for sure if I'm accurate. We saw a high of like 183, and now we're down $20, 163. This is a daily chart. That daily chart's telling again, because you can see how far we are above value there still. And just in the 610 chart, which is a half day chart, I mean, this thing could easily go to 132 and still be bullish technically, right? So this thing looks, we got earnings again coming fast and furious next week. Is going to be the big earnings week. Netflix already announced last night, if you hadn't noticed, and we're going to talk about that a little bit. Netflix got cut in half. So if you don't, and again, the cut in half from the high that we saw mid-November. Talk about this a little bit. You had an interesting take on it before we came on air.
Yeah, it was the same type. My fundamental basis or argument is sort of like what we talked about yesterday or the day before about Kathy Wood and ARK. The more redemption she gets, the more she has to sell. The more she sells and the market goes lower, the more redemption she gets. Just like on the upside, there's a lot of things that involve on the right side. For me, Netflix, though, and you said you aren't a subscriber. It's
no, I am. I pay the monthly bill. I just don't use it.
Oh, got it. The amount of content that they produce is staggering. It's staggering how many series you can flip through that have 1, 2, 3 seasons, 10 episodes a season. And for me, that's all that left side, that ability with unlimited cash to keep producing unlimited amounts of content, right? And then now we get on this side. What happens, to your subscriber base when you don't have the backstop of that free money to keep producing content? And people are like, you know what? There's really anything that's catching my eye on Netflix. See you later.
Right.
And I don't know. I just think that's part of the risk profile here as we move out of the pandemic, and everybody's just two things. Everybody's just not sitting at home all the time needing to binge watch on something.
Yeah,
right?
I got to imagine even the worst offenders of that type of behavior are getting like they got to feel shitty about themselves after 2 years of doing that nonstop.
Dude, we tried to watch one last night. I don't even remember what it was. I liked a few of the actors. It was so brutal. I was like, I don't even think we got to the 30 minutes, like done off. So,
but that's kind of, like, it's funny you said that because like I flipped on a game maybe Wednesday night, but I haven't, outside of that, Monday, Tuesday, Wednesday, I have not watched I watched the Monday Night Football game. I have not turned on the TV all week, which is, and I don't feel like, and there's no sports until the NFL this weekend, but for me,
we're going to jump into the NFL. And before we do that, let's just take a look at our friends at PENN Gaming.
Yeah.
And because we got you got this, and then you got March Madness, and then it's over till next fall as far as betting is concerned.
Yeah, and again, coming into the hole, making new lows here. We said 40 was the kind of your first target. Well, we went under 40. I know I had an alert today. So right into the top of value here. But again, this is definitely going to our price here, 33. Let's just call it 33 for government work. That will trade sometime here probably.
And then you got a hole to fill.
Yeah, there's holes to fill below that, down to $20. I mean, this thing is still a $7 billion market cap. They don't do, I just don't think they're doing anything close to those revenue numbers. So, there's no metric you could show me that fundamentally is going to say this is a buy now. That's just not, I just don't see it.
Because you can make a lot of money gambling. But anyway.
I mean, just the again, you've talked about it, we have talked about it nonstop for the last year, but it's a race to the bottom. I mean, these apps, I've never even heard of half the companies these kids use, and they don't even care. Like they're trusting, first of all, whoever makes these websites and these kids are buying them, they don't care. I mean, they know the kids are going to lose anyways, no matter what lines they put up there. So it's just a matter of time. And so there's so much. How do you pick a place to go gamble? I mean, even Oregon announced they're doing, I think this week they rolled out something with DraftKings, like they changed their whole thing because it was so bad. They're, the Oregon app that they built themselves. Again, computer programmers, not building a mechanism for computer programmers, but not sports bettors.
Well, you're for sure not building wealth gambling. I mean, how much more clear do we got to fucking make it?
Right.
Like, yeah, great, it's entertainment, but to think that it's like a long-term growth stock, like let's make gambling great. When was gambling ever great?
Right.
How about never? How about that? How about fucking never?
Right.
What did I want to? Where did I want to go from here, Matt? Hold on.
Let's talk a little NFL.
Let's talk NFL.
Right,
Matt, as we do that, let me just say that I love this cartoon. We like doing cartoons every day. I think we might have shared this one before. This is part of a larger agenda. I think you're being paranoid, Matt. You were talking as we came in about the masks and how now children are suffering linguistically from being masked, especially young children.
Yeah, the huge increase. Like the study was 350% increase in delay in basically normal speech.
And here, and let me just tell you why this is important. All right, and how you might be able to relate to it. Like if you can't see somebody's mouth moving, it's a big part of your cognition and speech, facial expression, mouth moving. And let me tell you how I know this. You try to watch a fucking movie or anything where the speech is delayed from the mouth movement, you can't watch it more than 38 seconds. You're like, I can't even watch. I can't look at it. The voice is not lining up with the movement of the mouth. Right. And it drives you nuts. And so, of course, that's weird. Masks actually are detrimental in speech cognition. Oh, okay. I think you're being paranoid. No, fuck you. I'm not being paranoid. You're an asshole.
Right. Yeah.
All right, let's talk NFL. I got that off my chest.
Well, so we got, basically the semis of, the conferences this weekend. And I kind of like that because they do one AFC, one NFC, one NFC, one AFC this Saturday, Sunday, which is kind of fun. The Titans are hosting the Bengals at -3.5 on tomorrow. And the Packers are hosting the 49ers up in the Tundra also tomorrow. And it's 1:30 and 5:15 here on the West Coast game. So, you're 4:30, 8:15 there on the East Coast. I like both favorites, I guess, in that first, Saturday section, Bob. I like Tennessee giving the points. I like Packers giving the points. They both were sitting at home last week. They're rested. They got the playbook ready. I think that's a huge benefit. So I'm going to take both those favorites on Saturday. Who do you like?
Well, especially since the game's Saturday, expecting 20 degrees, 24% chance of snow on the tundra, 17-mile-an-hour winds are not going to be fun. It's not going to be fun getting hit in those conditions. Again, San Francisco, if they did not go someplace and spend 4 or 5 days in freezing weather, they're going to get shellacked. Shellacked.
Yeah, I think so. Especially the breakdown they had at the end of that game with the Cowboys. I thought they were going to lose that one. Sunday, we got the Buccaneers, Chiefs. Buccaneers and Chiefs hosting. Buccaneers versus the Rams. That's a 2.5-point favorite. A lot of injuries down there in Tampa Bay. A lot of injuries. I don't know if you know, like, Fournette, a number of the receivers, a couple defenders, couple offensive line, but you still got Tom Brady. I'll leave you with that. And then you got Chiefs also. Both these games are -2.5, playing the upstart Josh Allen Buffalo built Bills.
Again, man, I think I love Buffalo in this game. I mean, I don't know. That's just, I'm terrible at believe me, I'm terrible at sports gambling. So if you want to fade, as we know, these are none of my strategies in the NFL are available because now they're all pick'em games basically. Right. I'm going to take the favorites across the board. I'm taking the Bucks -2.5, and I'm taking the Chiefs -2.5. All the favorites, all at home. What the heck? All right, Matt, we're going to, let's look at the weekly setup because as we came in, I was saying how buying the dip, this is a different setup. All right. But before we go though, remember you can explore your taste buds with Manja Shrimp Mojo. Google it on Amazon, Shrimp Mojo. You just got to Google that on Amazon and you can buy it because The bugs are coming. Eat the fucking bugs. Greta's got her 9mm. Bugs now legal. You know, there's legal tender, Matt.
Make
There's
bugs
actually legal.
make
food.
bugs make bugs legal again.
Yeah, bugs are legally food now in the EU. I'm not sure they're legally food here, but I'm sure that's coming soon.
Well, I've had some chocolate covered
To a
beetles.
delicatessen near you.
I've had some of these things before, but
I had the cricket, the cricket bar for sure. All right, man, let me share this is the weekly in the spoos. And I want to point, so fully into we call that the collar, right? John Bollinger would call that just his band. Actually, it's a different little inputs than John Bollinger's inputs. But it's a complete overperformance on a standard deviation basis to the dark side. I want to point out that the last time that we actually had this was back in February of 20. And amazingly, and I would, if this was an hourly chart, just like this did, I could see next week where we could actually rally and test that momentum level. Right now, 45.82 is the momentum level. That's going to kick south again. Now on the weekly, we're going to have negative slope to the standard deviation modeling, which is important. It's nuanced. What I wanted to point out, though, we talked about coming in, was the COVID break was a 4-week break and it was done because the government came in with massive stimulus, turned on the printing presses to a rate that has never before seen.
right.
And voila, wow, we had a giant run. My question to you is, if we start breaking, I mean, they put up the printing presses on because we were into a pandemic lockdown. I mean, it was existential threat. If it's just the market is breaking and values are coming back to earth, is there any reason for the government to get involved in that reevaluation of what things are worth?
I mean, in the past, and in the history, I would say no, of course not. But we know that it doesn't matter what administration anymore. They seem to be concerned about the stock market because, and I think it's complicated. Again, it's not a simple issue because people aren't in bonds because there's been no interest rates in bonds. I mean, they're in bonds, don't get me wrong, but there's been no return. So if you're looking for alpha, you're looking for return, even if you're 78, where are you going to go? You got to be in the stock market. So unfortunately, you say that, there's not a lot of retail money. And I would actually argue there's a lot of retail money in this market, probably more than ever. And it's there for the wrong reasons. It's chasing. And so there's, to me, to kind of back up your situation, we've never been here before. I don't know how they're going to react, right? Are they going to hold through all this and we go higher, or are we just going to be done with it after a quarter, or are we going to continue to go down for the year?
A couple other stats that I saw that the dot-com bubble, it took 14 years to recapture those levels.
Yeah,
for the NASDAQ. And so I'm not sure the Fed has a try mandate. I thought it was inflation and employment, not valuations being fucking ridiculous and defended. Is that part of their mandate?
Yeah.
Well, part of their mandate was we get to trade as Fed governors. And if you're a congressman, you get to trade too. Believe me, I spent enough time in the structure of the market, being on the floor. And when you hold the deck, you are a way more equipped trader. When you know where all the price levels are, stops, it's very important information. And I'll say it again. If the Fed isn't short up their ass right now, right, and short this market, they're doing it wrong. All the governors were trading, right? And so, like, you're trying to tell me that maybe the I don't know. You can't.
How many governors retired in the last year?
I think 3. I don't know, 3 or forced to retire, leave. I was in this American Institute of Economic Research article again.
Did they all take their bags of money with them though? When they?
I'm sure they did, Matt. That's what you do.
Mm-hmm.
You collect, you cheat, and then you leave.
The NASDAQ is interesting. We talked about this, I think, yesterday. We are going to flip a weekly sell signal, which we haven't seen since, again, last March. So that's a new, which is interesting because we're already, we're down 2,000 points. I mean, we're down considerably. It took so that's how far, like, we were stretched just in kind of basic moving average. This is a simple moving average that I look at, on all my charts. And on a weekly chart, it took a 2,300 point move down just to get below that line finally. So that's a big move, just to show you, how far above it we were. And then it took that many weeks to break, back in, I think we were mid-November when we made the high in the NASDAQ. So we tried a few times, so we're just entering like the meat. If you look at a 1-year chart, and I can show that real quick.
Yeah. Bring it up. Let's talk profile.
We're just entering the meat of the profile this week when we broke that level, right? So we broke there at 15,050 this, which was low from last week. When we blew through that and all the way down to 14.5 today, another new low. We're kind of holding right where we should, but there's another valley of doom here. And if it gets back below 14.5, we're gonna trade pretty swiftly again, probably down to 14,000. And then the point of control is back here at 13.7. I mean, there's a lot of key levels here that need to be tested. We need to see, are there real buyers at these levels? That's healthy markets. This is what you want to happen. I mean,
let me just explain the nuance too.
Yep.
I mean, Stottlemyer's work and all the profile work was markets distributed in a bell curve.
Right.
Well, you don't get a bell curve unless you expose both ends of the price discovery. It's impossible. You don't get a bell curve. And when you look at that chart again, like there is so much potential to the downside that it's not an aberration.
No.
If that's an hourly chart, you're telling me that you don't think that we could go down to 1,200 or 12,000?
11,000.
Of course you could.
11,000. Yeah. I mean, if you're out of value, on the high end, by 2,000 or 3,000, you could actually go down to 9 here once you got below value, which was at 11. So, I mean, that's the reality. Are you okay with, holding it from 14.6 to 9,000? Because
buy the dip, Matt. Buy the dip. It's been
It's
been working really good for a year and a half. I mean, really good.
Yeah. So, I think it would be fruitful to test 13.7. I think it would be fruitful to test 12.9. I think it would be fruitful to test 12,000. I do. I think those would all be good things to happen. 20% off, which is the traditional bear market, is, again, you're talking 30, was it 33, 3,300, basically 33 and a half. 100 points, which again takes you down to about 13,000. That tends to line up with here. That's 20%. That's all that is. This is a 20% haircut. We're not saying, I mean, these value, and that's still far above the 2020 highs. I mean, even at that level. So it's I don't know. It's an interesting time. Again, all the saber rattling going on in the world that will have an effect at some point. The bonds have recovered today. I'm surprised, we started to rally earlier, but in the equities, but they just couldn't hold it again.
Yeah, it'll be interesting here coming into to the last 3 hours of the trade. I mean, when I look at the daily, the 2-day, the 3-day, the weekly's overextended, but there's still room here on the daily in particular. The daily, the collar in the NASI doesn't come in until 14,278. 14,278. SPOO's got room to 43.67. I don't, and yesterday afternoon, dude, that sell program was as methodical as could be. I mean, it just stair stepped down all over to the lows. And I can actually see a repeat of that, the way things are setting up right now today.
Yeah, I got a feeling we might have a little, we're just going to kind of hang around the middle here, and probably close out maybe around 720. That's been the most traded number today. We're at 630. I wouldn't be surprised to kind of see us make them guess for the weekend, right? Get rates of balance for the day, not for the week, but for the day. And the short-term traders think that they have some control maybe then. But yeah, I think there's more to come next week. But that's just kind of what I see. I kind of see, that battle kind of forming. The week point of control is 15.3, Bob. So, but the days range is right there around 700. So watch that area, see where we close. Again, we're far out of value when it comes to the weekly chart. You start looking at a little longer. Obviously, we've fallen out of bed here. Pretty much any time frame, except for the longer ones that we just discussed, are kind of going to be. We're going to, the shorter term out to a month, we're going to be below value most of the way out here. And, expect vicious rallies. That's what bear markets have. So expect them and be prepared for them and know where you're going to get long and where you're going to be getting out of your short here if you're dragging along a bottom for a long time, right?
Right on.
You have to prepare yourself for the whipsaws that come.
Whipsaw Nation. All right, man.
And, those are opportunities to put shorts back on and individual equities. So use those, use that when they come, take advantage. I think it's a good thing.
There's a play at the plate, Matt. There's a play at the plate, and Meatloaf is out. He had a great run, though, dude. I mean, he had some fun in his life, right? That fun meter. I can't imagine how much fun that meter went through.
Yeah, I mean, the guy had energy galore.
Listen, my brother used to say, and I know he didn't make it up, but nothing great was ever accomplished without enthusiasm, right? And let's have a little enthusiasm here for the great trading that is, dude. How does it go away? Just how do we flatline?
I think again we're into the meat of the earnings the next couple of weeks, so that will keep us already in a state of higher vol. And, I think probably into the next quarter, I think, we could have a really good, busy, end of winter turn into spring, up to, Easter, whatever. I just don't see it stopping right now, Bob.
Neither do I. We might. All
right,
man. Thank you very much. Good luck. Please join us at marketvitals.io. Please share, retweet, copyright infringe the broadcast as much as you please. And we will see you next week for another segment of Market Vitals. Ciao, Matt.
Peace, Bob. Have a good one.